Thank you, Kate, for joining us today, Stephen and I, to talk a bit about some of the issues that has been raised in our Business Outlook publication. 2020 has been clearly a roller coaster for the hospitality industry, and thanks for helping the hospitality sector go through it, and very well done for your OBE as well. That's really a recognition, and you must be very proud. So we just wanted to have a discussion and see your point of view from the industry on what has happened during 2020. How has it been on your side?
Well, thank you very much for inviting me here today and to join you talking about your Business Outlook research. And thank you for your kind words about my OBE. I think it is a recognition of the hard work of the whole team of UK Hospitality, but also a recognition of what the industry has been through and how the industry has worked together to overcome it. So I think, 2020 has been catastrophic for the hospitality sector. There is no other way to describe it. If you look at the sort of comparison of where the industry was at the end of 2019 with where we are at the end of 2020, much diminished, very battle scarred. So, we started 2019 on 2020, I should say, on a positive note. The industry was worth £130 billion. That's larger than aerospace, automotive and pharmaceuticals put together. It had 3.2 million people employed within it and a further 1.5 in the supply chain. And that employment number had grown. We generated 1 in 6 of net new jobs in 2019. We were contributing £40 billion of tax to the exchequer, £1 in every 3. And we were also investing about 4% of our turnover invested in CapEx, £10 billion a year in the high street. If we look fast forward to the end of 2020, we haven't got the final figures yet, but we were looking at a sort of revenue down by a half at the end of Q3. So before we went into the downturn and the second lockdowns and the restrictions over Christmas, revenue had already fallen to 80 billion. We anticipate it will fall well below that by the end of the year. 660,000 fewer members of staff. So a big drop in employment, 20% down on employment, a tax squeeze and obviously a CapEx squeeze. So the impact not just felt on our businesses, but felt on communities, high streets, town centres across the UK and felt economically. And if you look at the contrast between, as we went through that COVID period, you look at the contrast of the GDP growth that we were able to help deliver when we were reopen again in July, August, compared to what happened in October, where we were an anchor on the economy. You can see how much of an impact hospitality's decline has had on the nation's cultural, social and economic life. Really a bleak picture.
We've done a sentiment survey in Business Outlook, and we will share this. And on my side, on the hotel side, obviously for 96% of people in the hotel industry had a very significant, a very severe impact. There is no doubt that not being able to trade for more than 4 or 5 months of the year. And when you had some hope that you could recover even after the summer when everybody had a bit of a boost, then we went back into this situation. So it's been really, really difficult for businesses across the country.
Yes, and obviously on the hotel side, that impact felt earlier as you see the downturn in business travel, international tourism hitting hard. And as you say, even if you have a good summer, it's not enough to repair all of those losses. But then you're forecasting ahead. It's the hotel sector that's going to take the longest time to rebound. And the sort of latest data suggesting that you're not going to get to pre-COVID levels of revenue until at least 2022 and not into profit again until 2023. So that sector of hospitality particularly badly hit.
Yeah, no, again, the sentiment survey, we've asked people their view on the recovery curve, and they basically said that they can't see it happening over the next 2 to 3 years. And some of them actually, probably a quote had said even longer than that. But let's try to be optimistic.
Yes.
But clearly there was a lot in 2020. I think on the pub side, Stephen, slightly.
Yeah, it's on the sentiment survey on the pubs, it's quite interesting because we had so 20% of pub operators thinking it would come back within a year, which is quite encouraging. Whereas on the restaurant side, it was a slightly more pessimistic situation that 25% of operators thought it would come back in a year. But I guess the majority of both pub and restaurant operators are looking at a sort of 1 to 3 year horizon for, when trade might get back to some semblance of normality. So, yeah, I think that's quite key actually, and what the keys will be to drive that recovery going forward.
I think you're right. I mean, part of that is simply down to the high level of uncertainty around when we're sampling lots of people about their sentiment. We did a similar one with our membership sort of just before Christmas. And, you only got 1 in 5 saying across the whole of hospitality, that was 1 in 5 saying that they were confident that they would have the cash reserves to be able to get through and start into the recovery period and get beyond Easter. And I think it is that high level of uncertainty around reopening, the challenges of the high fixed costs that you've got it. I don't think it's surprising that in the restaurant sector there's more pessimism given the anxiety around rent and rental and property costs going forward, and the uncertainty around what the framework will be, business rates, rent moratoriums, all of those kind of issues that will impact it. And the single biggest factor, I suppose, is around consumer sentiment. How quickly will consumers feel comfortable and confident in coming back to our towns and city centres? What will happen about returning to work?
Yeah, that clearly the return to work is a big question, and it's well publicised that leisure will be obviously the first to pick up, but hopefully there hasn't been any fundamental changes, or too many of them, in the fact that we're still happy to travel for work. And obviously in the current environment, if you can save some cost on this side, employers will be quite keen to limit this cost. But I think we've proven that we are resilient, and as soon as you reopen the door, people need this escape. So staycation will be very much leading the charge in terms of the hotel industry, and that impacts on pubs and restaurants, of course, if we can travel.
Yeah, I mean, I think when we saw that pubs and restaurants were able to trade, actually they traded quite well, particularly during August. And picking up the point, I guess, that Carine made, is that we've seen a trend towards staycations. So tourist locations have performed well when they've been able to trade. And equally, I guess, we've seen that pubs and restaurants in community locations with localization occurring, again, have reacted fairly positively. I guess a lot of the challenges we've seen are probably around towns and city centres, because people are not going back to work in the numbers which we've seen in the past.
Yeah, I think that trend will start to reverse as we get out of this third lockdown. I think what you saw in July and August, when premises were able to reopen, was two things. It took a little while to get consumers back to feel confident and comfortable. I'm not so sure after the third lockdown it will take quite as long, but we got about 60% of the UK population returning to pubs, bars, restaurants, hotels after that initial first lockdown, but that was only by the beginning of September. And the other thing I think, which is going to be critical going forward, even those premises that traded well, that traded full, were at a sort of artificially suppressed occupancy and earning capability because of social distancing. So the ones that were sort of, when people said hotels were full, restaurants were full, visitor attractions were full, they were trading at 60 to 70% of normal occupancy. So full at a suppressed level, and that's going to be a critical determinant going forward, because even the ones that did well didn't get to more than break even at the end of the summer. So I think going forward, it's going to be how quickly can you reduce some of those restrictions, how quickly can you ease some of the social distancing conditions, and how quickly we can get to break even point.
Yeah, no, very much so. But do you think in 2020, despite everything that has happened, and that has been really a tough year for everyone, do you think there's been some positives? I mean, on our side, I can start, but what we've seen is superb confidence in the longer term outlook of the sector. We had a lot of people calling us as soon as lockdown started saying, you know what, we still believe in this sector. We want to buy, and we want to, maintain our footprint.
Yes, I think there have been positives that have come out of it. And I think that the crisis, however difficult it has been, has shown hospitality at its best. And I think there's three key positives that I would take out of it. I've always said that our industry is one of the most innovative and dynamic industries. It continually reinvents itself. It's a very old industry, but it continually reinvents itself. And you think about the casual dining revolution on the high street and how recent that is. We've seen that continual innovation through the crisis as people have pivoted within their businesses to be able to offer different types of services, different ways of providing service, investment and rapid rollout of technology to help with reopening, online ordering, things that businesses had said their customers wouldn't tolerate, that people wouldn't like it. It took away the personal service, online check-ins, all those kind of things. Those were invested in quite heavily and rolled out very rapidly. The pace of change that we were able to implement was astonishing. So I think that agility of decision making and the innovation that goes alongside it is a really big positive. The businesses and the sectors of the economy that did the best were the ones that had the most agile leaders and the ones who could sort of manage that process. And that leads into the final positive, which is the community goodwill that we have had throughout this crisis, the positive support from the media, from politicians, from our general public, from our customers. There's a huge groundswell of opinion of positive rapport with the hospitality industry. People have missed it, and that leads for confidence going forward because they want to get back to it.
Yeah, I mean, I think it's quite interesting because from a personal point of view, there's some great local examples of use of technology, how premises have been made safe. And from a customer perspective, there's seen some really positive feedback about how hospitality have both made the premises feel safe, but welcoming at the same time. And I think, there's a great, I guess, sort of public sort of understanding of what hospitality can do and the speed which they've managed to change.
Absolutely. And I think that experiential side of hospitality and leisure is one of the key things that has stood us in good stead and has helped us navigate that difficult balance between implementing and imposing government restrictions on our customers when our normal response is to be, sort of offering service or doing as much as we can. So I think it's very good news that we are personally rediscovering our countryside, personally rediscovering our country and our ability to have a vacation here rather than jetting off for short haul breaks. It just need the weather to stay fine.
And we all have a role to play in that, in supporting communities. And I think people are keener to do that. Go to your local pub, they actually see you can make a difference just by having a meal in a pub. That their lifeline. So I think that's really beautiful. That's a beautiful.
There's definitely been a sort of reconnection, hasn't there, to the local pub and the local restaurant, which I think is great.
Absolutely. And I think there's a trend towards hyperlocalism. And you're also seeing that when people are working from home. And I think you will see a shift in our town and city centres. People will still go into the office, but those venues in the town and city centres are going to have to adapt to provide something for people who are living in there as well as working in there. And our neighbourhood outlets that have sort of traditionally been there for us during the weekends are going to have to pivot to provide that business space as well. So I think there's some exciting opportunities coming through in 2021 when we get out the other side of the pandemic.
And I guess none of us really know how much of that sort of behaviour is going to be permanent. Whether people will continue to work from home or whether there'll be sort of more time spent working from home rather than in city centre offices. But I guess some of these changes are going to be permanent, and there are going to be beneficiaries in our sectors, those restaurants and pubs which cater for those local communities.
I do think we're social animals. We do want to interact. We get better ideas going in the office. But I do think the trend will be towards smaller offices, less frequent attendance at the office, and probably more flexi time, so that I can see a situation where people, work a couple of days in the office, a couple of days from home, or equally in flexible spaces nearer their home. And I think that will help to regenerate some of our secondary and tertiary towns and city centres where you'd had a sort of vacation of people out of that space. I think you can get that redeveloped. And it does mean that longer term, from town and city centre planning, you can look at mixed use with sort of greater residential, which needs a different kind of leisure, but it will always need leisure and hospitality alongside it.
Yeah, and I think the changes to the use classes order probably help that as well.
Yes.
More flexibility of use both by day part and within buildings. So I agree. I think it will help sort of revitalise some of the town and city centres by having more mixed uses, which is good. In terms of sort of looking forward to 2021, what sort of the key challenges are?
Well, I think the key challenge is that we're not going to have 12 months. We're going to compress into 9 months. The first quarter of this year is going to be a write-off. It's going to be COVID. It's going to be difficult. And I think it is going to get worse before it starts to get better. Well, it has got worse before it starts to get better. Then when you look forward to the vaccine rollout and moving forward into the recovery phase, I think from a government point of view, we do need to have that longer term thinking. The biggest problem that we've got at the moment impacting on business confidence and business investment in our sector is the high degree of uncertainty. The fact that the situation, the operational situation can change in a matter of hours, days, weeks. If you think about what happened just before Christmas and New Year, when premises who thought they were able to open suddenly had it taken away, and then getting over into the next period, what we crucially need is an extension of the business rates holiday, 100% business rates relief, extended for the whole of next year, and then we can review and overhaul the business rates regime. That gives us time to do that. But I think the recovery, particularly in town and city centres, will be impaired unless you have that breathing space on business rates. It also allows you to address the rent conundrum with a little bit more time. You then need to extend the lower rate of VAT for tourism-related services. It can't be helpful if the day after we reopen and the recovery starts, you put prices up 15 percentage points just because you increase the VAT rate. So those are the two key things that we need from the government over and above that longer-term plan. And then you do need a strategy for recovery, which is working on one around international tourism and travel and one around the high street. And I think in particular, looking at that really Gordian knot of rent debt and how you resolve that issue so that you don't get these massive empty spaces and people handing back keys simply because you can't get an agreement between landlord and tenant. And the government did promise that there would be a review and an overhaul of the Landlord and Tenant Act when they talked about the latest rent moratorium. So those are my top three.
Yeah, I think the rent one's really difficult because I guess there are two aspects to that. One is the rent debt, which has been accruing over the period since premises have been able to trade or have been under restrictions. And also you then got the rent rebasing exercise, because actually trading going forward is going to be very different to where rents were set looking backwards.
Yes.
So there needs to be somehow a mechanism to deal with both of those aspects. And I guess the code of practice at the moment doesn't really enable that discussion to happen in a positive way.
No, it doesn't. And I do think you are going to have, I know government is very reluctant to interfere, but I do think it is going to need government intervention to be able to resolve this, because even if you've got two parties who are willing to have that discussion about rent rebasing, revaluation and settle for going forward, you've still got this lag of a year's debt built up that is inhibiting that discussion. And I do think government needs to help find a solution through that rent debt to be able to help both sides, because clearly the lessee cannot pay that in one go. The landlord in many cases also can't afford to address that. So we do need to find a way through that. And I think the government can help us decouple those two conversations. The market over time will be able to address the valuation point, although how you value property at the moment, I just think it's an impossible task. So how you can do a rent assessment, how you can, look at what the passing rent is or the, normal rent, I just don't understand it. So I think that's going to be incredibly challenging. It is a Gordian knot, and that's why it's going to need time to get it resolved. But it needs willing parties and stakeholders from all sides, and only government, I think, can convene that, because it needs landlords, banks, financial institutions and lessees to come together to work a way forward. Otherwise, if we don't get that, we are just going to have huge gaps in our high streets, in our town centres, and all that good work from the government to protect the industry is going to go to waste.
Yeah, I agree. I think there needs to be some kind of formal basis put in place which helps both landlords and tenants reach financial agreements, maybe with some central support from government to bridge the gap between the two parties.
Yeah, we've seen the same, I think, in hotels. Obviously, we had the travel lodge CVA. That was a big one at the end. Most landlords remain with travel lodge and accepted all the terms. So it showed that when you're faced with a situation, quite often you just go with it. and Bonnejean asking obviously for the first time for a rent reduction. They've been really good, but and when they did it in December, they were a bit clairvoyant in seeing what was going to happen for the next 3 months. So, but I think what we've seen in hotels mostly across Europe is people thinking a bit longer term and trying to find mechanism to make that work over, let's say, 2 to 3 years, because they realize you can't pay this time bomb of rent that you have. So, but in the UK, it's been a bit more complicated.
I think it's an easier discussion to have in some respects in hotels because of the type of asset base you've got there, and the fact that it tends to be held as a longer term asset. But it's very difficult in some of the sort of high street town centre ones where there's an ability to change use much more readily, and actually there you've got the government's change of use and use classes order actually making it easier to move some of those uses into retail or into residential, which means there's less incentive to reach a long-term solution.
The other thing I think we are seeing and we haven't seen yet, and I have to hope that we won't see too much of it, is distrust. I mean, more or less last year in hotels, but only 15% of all the transactions we made had a distress element to it. So again, it's quite important for the sector and all parties, all stakeholders in any to support the sector to avoid like what people call the wave of distress that could happen in the next few months. And because that would not be really a positive really for this year.
No, and I think that's where it comes back to government, and if the Chancellor can provide that certainty and clarity about next steps and look to extend the support packages that are available, that will help to avoid distress, because you can at least factor in those taxes, those business rates. You can factor that into the forward look on the P&L. You can build it into investment propositions, and it avoids people having to make knee-jerk decisions and knee-jerk reactions. So some stability and certainty and clarity around exit strategy is what the sector desperately needs.
Now we have another subject that obviously has been not so much mentioned because we were too busy with COVID, but obviously in the middle of December, we managed to get Brexit done. So what are you members saying about Brexit, or frankly, for the moment, is not the main issue?
I was going to say, I think the fact that hospitality was largely closed, I think by the time we got to Brexit, 98% of hospitality was in tier 2 and tier 3 and tier 4. Effectively closed meant that we did avoid some of the challenges that you might have faced with exiting the transition. I think it's really positive news that we exited with the deal. That provides currency stability, and it's the impact on sterling and the fluctuation of sterling that caused the greatest impact on the hospitality sector. So we have got a deal that provides that certainty going forward. We've got no tariffs, but we do have non-tariff barriers. So I think over time, you will see a degree of food price inflation coming through as you've got the bureaucracy surrounding exports and imports from Europe. And about 60-70% of food for the hospitality sector is still imported. I think you'll also find extra costs because of goods that come into one part of the EU and then get exported and into the UK and then exported as well. Those are not tariff free. And so that will impose some additional costs. Coffee, some of the fresh produce that's flown in, but we will see food price inflation. But if we were looking at leaving with no deal, the anticipation was food price inflation would run at somewhere between 9 to 13%. We're actually looking at it being about 1 to 3% this year, and at the end of the year falling down to sort of the same level as RPI. So from our perspective, the pricing issue sort of slightly dissipated. We do have the supply chain issues where there are going to be delays at the border. And I think as the economy gears up, we will see the impact of that feeding through. At the moment, all the info that we've got on border flows is saying that it's okay, it's not causing too much delay, but there's so much less traffic going through at the moment. So I think you will see that potentially later. And then the final point is from our international travel and tourism perspective. We need to work hard to make sure that the message gets out there that the UK remains open, that we've got visa-free travel. We do have now some restrictions for people who are coming in from the EU and coming into work as well. But we do have that 90-day period where people can come over for work without a working visa. But it will add a little bit of extra complications, and we don't want to get back to a situation where the UK borders are so tight that our international visitors choose to actively avoid the UK. And then the final point, longer term, again, the issue for our sector when Brexit was first talked about and we were looking at the transition was labour market and immigration. And clearly with 2.5 million people unemployed and large numbers lost in the hospitality sector, we're not in that same labour squeeze that we were. That again will come back to bite us. We will have to face that battle going forward. But I do think we've pushed that off by 1 to 2 years.
I think it's trying to encourage people to come back into the sector, view it as a career rather than the job. So whether it's through apprenticeships or training or promoting the sector in a more positive way, I think it's trying to encourage people to view it as a career rather than a job, isn't it?
Absolutely. And I think, the advantage that we've got there and the message that we've got through to government and that they're supportive of is that we can take anybody at any age, any skill level and find them a job across. So you have got large scale job losses that are coming through in other sectors, retail, distribution, other parts of the economy that have struggled. Hospitality, if it's got the support, will rebound very quickly in terms of job creation. And we can go back to that 1 in 6 job creation that we did after the last recession. And we can draw those people across from travel, tourism, airlines, leisure, retail, distribution. So we are going to have a better pool of people to encourage to come across to hospitality. And I think, as you say, a really good opportunity to talk to those young people about it as a career.
I think from our point of view, we see that there's no shortage of investors keen on the sector, whether that's at an individual property level, people who want to come into the sector afresh, or existing operators, but equally, some of the larger private equity investors who see it as a long-term sector which is comfortable for them to invest in. I guess the issue is how quickly the vaccine can be rolled out. The light at the end of the tunnel will give them confidence investing sooner rather than later. But I think the fundamentals of the sector are quite attractive to a whole broad range of investors.
I think they are. And I think, we have to take heart and go back almost to where I started when I was talking about the sort of big numbers. Which other part of the economy was growing 5% year on year? Which other part of the economy was seeing considerable growth if you look at experiential leisure, in opening up new markets and opening up new opportunities for asset classes to be used in a different way. And hospitality is the quickest, it's first in and it can be last out, but it's the quickest to rebound. If you lift the restrictions on one day, people will come out and buy the next, and you'll be creating a job on the third day. And you do get that rapid return. I think the fundamentals of the industry are sound. The sort of rush, the private equity rush into restaurants based on an understood margin might need a rebasing, but that gives an opportunity to rebase it and then make it much more sustainable going forward. So I think the opportunities there are attractive. The thing that's holding back investment at the moment is that lack of certainty around an opening date. And that's where you've got the sunlit uplands of the vaccine coming through. You can see an end in sight. You can go onto the Times and log on with your birthday and it'll tell you when you should be vaccinated. And you can see very rapidly how you could get reopened and back to a degree of normality. It's tantalizingly close. And, if I talk personally, I know I'm probably not a typical person, but, I really want to get back out seeing live music. I want to go out to some of the destinations that I haven't been able to visit, the hotels that I haven't been able to go to. I want to travel around, want to eat and drink out. And I think that there'll be a lot of people who feel the same way as I do. And more importantly, there is going to be a large chunk of people who didn't really come out in the first wave of reopening in July, the older generation, the sort of 50 plussers, and who have probably been working from home or on furlough for a long period of time. And if you're working from home, you have a higher disposable income as a result. So there's going to be pent up demand, and there's going to be pent up disposable income from those of us who've been fortunate enough to be working at a reasonable level, or civil servants at a reasonable level of salary at home without their commuting costs are going to be much better off, and hopefully will want to come out and spend.
Thank you very much, Kate, for your time today. It's really appreciated, and for your fantastic insight into the sectors and opportunities going forward. Yeah, I think we're all pretty positive that once we can get back into pubs, restaurants and hotels, you know, there's a very positive future for the sector. So yeah, thank you very much for your time. Really appreciate it. Thank you.
Well, thank you for having me, and I look forward to reading the Business Outlook in due course. Thank you.
Thank you.